Hi students, in today's session we will talk about the remaining parts of data of lab 1 that contains two variables, weight of diamond and its price in the market. And we have completed question number 1, 2 and 3 in the previous two lecture video series. Now we are going to do question number 4, describe weight code and price code. Whenever we are going to describe any variable, we need to first consider whether the given variable that we are going to describe is a quantitative variable or a qualitative variable. If we have qualitative variable, then we go for frequencies. So these two variables that are qualitative in nature, that has two categories, weight code and price code, we have created these two variables based upon the borderline provided in the uh, previous part, question number 2, for variables weight and price. Now what we do when we are going to describe the variables which are qualitative in nature, we have to go for frequencies. So the path we need to follow in SPSS is analyze, descriptive statistics and frequencies. Now we can see this window has appeared and we will select these two variables, weight code and price code, for data analysis. Now if we look at the options we are available in a statistic button, so we can see quartiles, cutoff points, percentiles, standard deviation, minimum, maximum variance, range, standard error of the mean, median, mode, sum, and skewness and cutoffs. All the commonly used measures that we go for performing data analysis for the quantitative variable are available in this option. So since our variable is not quantitative variable but a qualitative variable, therefore mode is the only viable option we need to go for. So we skip this. Then if we click on charts, we all know that whenever we deal with qualitative variable, we have to draw a bar chart or a pie chart. If we have two categories, then we go for bar chart. If we have multiple categories, we can also go for pie chart. But preferably, we go for bar chart because minute differences between the categories of each qualitative variable can be best identified with the help of the bar chart. Histograms we go for only when our variable is a quantitative variable. So let's take example of the two variables, that marks of students and their grades. As far as marks are concerned, marks is a quantitative variable, whereas grades are qualitative variables or qualitative categories. So if we are going to draw a chart for a quantitative variable, that is for marks, we need to go for histograms because on the horizontal axis we take marks of the students, whereas on the vertical axis we take frequencies. Similarly, if we are going to draw a chart to display grade categories scored or secured by the students, we need to go for bar chart in that case. On the vertical axis, we have frequencies, same as usual, whether it is quantitative data display or qualitative, we take frequencies. But as far as difference between the nature of the bars that we draw in case of histogram and the bar charts, there are no gaps, or there should be no gaps between the two consecutive bars that we draw in histogram. Whereas since each bar or in a bar chart represents a separate category or qualitative category, such as grades over here in this example that I've just used, So in bar charts drawn for each grade category, the bars should be separated from each other. So should be gaps between the bars. This is what we need to take care of. Now, I have selected charts, bar chart, and now we go for paste. Then we go for this syntax, and then we run this syntax. So over here, what we get an idea about the distribution of qualitative categories that we have defined for the two variables. Weight code had two categories, light and heavy, and their percentage distribution is 60.4% of the diamonds are lightweighted diamonds, whereas 39.6% are heavyweight. Similarly, price code, if you go for cheap diamonds, are in 37.5 percentage, and the representation of the entire data for the expensive price diamonds are 62.5%. Over here you can take notice of one thing, that if we consider the relationship between these two variables, weight and price, we expect it to positively linearly correlated. But when we transform these two variables, weight and price, to weight code and price code, we should expect that majority of lightweight diamonds should be classified as cheap, and majority of heavyweight diamonds should be classified as expensive. But if we focus on the percentage distribution of these two categories, so we can easily see that lightweight diamonds are aligned with expensive, whereas heavyweight diamonds are closely aligned with cheap. So this is a kind of a reverse approach completely, or contradiction we can say. It is because of the fact that we may have taken the two border lines to get these two variables transformed to qualitative variables not appropriate. The borderline values that we have taken or considered may not be appropriate. That's why we can see complete misalignment if we compare the categories we define for weight and the category we define for price code. Now this is how we can see the bar charts of these two variables. So you can see the trends are entirely opposite. Greater percentage, greater representation over here in light, but cheap has a fewer representation. This is how we do it. Now, moving to the next question of the task sheet, Lab 1 data file. We are asked in question number 5 to describe the price behavior of all cheaper price diamond rings. So we need to consider over here the specification given for these two variables, price behavior of all cheaper price. Again, cheaper and expensive price diamonds are mentioned or created in price code variable, and we would like to see the price behavior as mentioned in the question or as per the requirement of the question. So what we do, we go for analyze, descriptive, and explore this time, because this is how we can perform the data analysis for a quantitative variable, because explore option gives us a very detailed analysis and measures of the variable that we are taking into consideration. Now we need to decide which variable we need to take as dependent list variable and which variable we need to move to this factor list area. Over here, notice one thing and keep this thing in mind whenever we perform a categorical analysis of any quantitative variable. When we take quantitative variable as the dependent list variable, over here we are interested in price. We are interested in examining or analyzing the price behavior of the cheaper price diamond, and cheaper price diamonds are defined in this price code variable. Since this is a qualitative variable, we need to take always the qualitative variable as a factorless variable. This is how we do it. Now we can click paste. We go for this, and this is how we can do it. Now you can see this table is giving us data analysis measures for both cheap price category and expensive price category. But the question is asking us to discuss the results or the findings of the price behavior of cheaper price diamonds. So we stick to this part of the table, first part. And the mean price, we can see that mean price is $321. Whereas you can find out a new thing. It is 5% trim mean. 5% trim mean software computes after arranging the data in ascending order and then trimming the top and least and highest 5% of the data in total. So software trims 5% data from the higher part and the lower part and then recompute the mean value. If we see a significant difference or change in the mean value, then it initially identify that there may be some extreme values that exist in the data. But this is considered to be a rule of thumb because we can not identify outlier by just comparing mean and 5% trim mean for the data. Now, 95% CI, if you look for 306.424 is the lower bound and 335.576 is the upper bound. Now, how can we interpret? First, since we are dealing with currency values, so it is better to round off the numbers to two decimal places. So lower bound should be taken as 306.42, whereas the upper bound can be taken as 335.58. Now, we can interpret this answer for 95% confident interval. For the mean price of all cheap price diamonds, we can interpret it as we can be 95% confident that the mean price of all cheaper price diamonds lies between 306.42 and $335.58. Now, as far as comparison of mean and median is concerned, so comparative analysis of mean versus median gives us an idea about the nature of skewness that the data possess. So if mean is less than the median, then it indicates that the data are negatively skewed. Vice versa otherwise, or you can say that if mean is exceeding than that of median value, then it indicates that the data are positively skewed. Here in our case, mean price is 321, whereas median price is 326.5. Median is greater as compared to mean, therefore it indicates initially that this is a case of negatively skewed data. And if you look at the sign of skewness, the sign of skewness is minus 2.43, that again indicates that the data are negatively skewed, and this minus 2.4 value is indicating a high degree of skewness relatively because it is well away from zero. Now, as far as kurtosis is concerned, so again we need to consider the kurtosis value with respect to the 3 because the skewness and kurtosis values for a normal distribution that is considered as a moderate distribution always used to compare the other relative distribution. So skewness value for normal distribution is 0 and its kurtosis value is 3. Now if you look at the description that we get, it is 7.216. What software does? Software computes the value of skewness, actual skewness of the data, actual kurtosis of the data by just subtracting from actual kurtosis the ideal value of kurtosis, which is 3. So actual kurtosis of the data is not given over here. Rather, actual kurtosis take away 3 is given as the answer. So when actual kurtosis of the data exceeds 3, then after taking the difference of that actual kurtosis value with 3, we get a positive answer. Similarly, if actual kurtosis of the data is a value less than 3 and we take away 3 from that value, we expect it to be a negative value. Similarly, if actual kurtosis of the data is 3 as well as the difference with 3 gives us 0. So 0 kurtosis indicate that it is mesokurtic because normal distribution kurtosis is known as mesokurtic, the moderate value. Whereas if kurtosis has a negative sign on the basis of the output we get from the software, then negative sign for the kurtosis value indicates that it is platykurtic, whereas any positive value for the kurtosis is indicating that it is leptokurtic. So over here you can see that kurtosis has a positive value and very high value relatively away from 0 again, 7.216, relatively a very high value of kurtosis. So this is how we interpret, and we can say that the kurtosis value of 7.216 indicates that the data are, or the price of cheap diamonds follows leptokurtic behavior. So this is how we do it.